In this video, we're going to be going through VWAP. So what is VWAP? VWAP is this purple indicator we've got here. Again, this is just basically a smooth line, slightly looks like a moving average. Now, what does it stand for? So V stands for volume, W stands for weighted, A stands for average, and P stands for price. So volume, weighted, average, price. So what this basically essentially means is, for example, here, we've got the VWAP on the chart, and we can see obviously this price is, or this line is moving, the VWAP is moving throughout the day. Now what this is essentially showing you is what is the average price throughout the day, but it also takes into account the amount of shares traded. So what this means is if you're trading and there's a massive spike, say Disney for example, because that's what we're looking at, spiked up to 93.50, maybe it's an algo candle, it spikes all the way up there and then you start trading back down here. On a VWAP, that's not really going to have any effect because again, it's all to do with the volume traded as well as price. So if the majority of price is traded here and there's a couple of shares traded up here, again, the overall VWAP is still going to be at the low. However, or not at the low, but just where current price is trading. However, if you are using a moving average, for example, you use a 9 moving average, you've got a candle here, candle here, candle here, candle here, candle here, candle here. So again, there you've had 6 candles, you have one spike up here, and then you have the final 2 kind of down here. The way this 9 EMA would look is it's trending down here, spike, it probably spikes to about here, and then kind of do that. So that is what you would kind of see with a moving average compared to VWAP. So now we know that to do with the VWAP and kind of what it is. Now, how do we trade it? So again, you can use this in multiple ways depending on the type of trader you are. You will use this in a different way. But again, all it's really showing you is the fair value on the day. So fair value is here. If you're buying above here, you are normally considered to be paying a bit of a premium. If you're buying below, you seem to be, or if you're buying below, you seem to be buying more of a discount. So discounted to buy down here, a premium or more expensive to buy up here. And again, this will obviously work on the flip side too. So if you're a short bias trader, you want to be shorting up here and you want to be taking profits essentially down here. Because again, you're up here, you're getting a discounted short. So you're going to be obviously expected to make more money on the short. And you're going to be looking to target all the way down. So how do we use this? And again, that is one way to use it. Kind of just know buy and sell. And obviously, if you're looking to buy, you're normally looking to buy at or below the VWAP. And especially if you're investing. I mean, if you're looking just to intraday, buy it from an intraday perspective, but for your investment account, and you want to just try and get that slightly better price, again, looking to buy below the VWAP is the way to do it. Now, it can also be used as a trend following strat. So, for example, if you're trying to long trade Disney today, again, it's holding its VWAP, it's coming back. You can buy the pullbacks to here. Again, trade the bounce, pullback, bounce. And in here, you are in discount. So here you can buy. Again, this is where the stock is considered to be discounted on the day. So if you want to buy here, you're buying a discount. And then if it pushes up, obviously, then you'll be paying a premium, or this is where it's in premium, so this is where you want to be taking profits. So again, the VWAP is just essentially a fair value line. Buying below is where you're going to be paying a cheap price, and if you're buying above, it's considered to be expensive. So that's really the way you use it, is just how you want to get expensive or cheap. And again, obviously, if you're doing the short bias, if you're shorting, buying above here is considered cheap. And taking profits down here is normally what you want to do because it's expensive. So that is kind of the VWAP, how most people use it. Again, it's not normally something I will personally trade bounces off, or kind of try and trade bounces off or shorts off of it. But it's just normally a good guidance to use. For example, if I'm shorting Disney, again, I'll use it as targets. Actually, how I'd better say it. I tend to use it as targets on the way down, because I do know that buyers will step in. If I'm short Disney in this range here, for example, I'm going to want to be taking stops, or at a minimum moving stops to break even as we come into this range, because I know this is where buyers will step in. And if what you'll normally see is volume will step in. So if you look at the volume candles, volume steps in at VWAP. Come in here. Again, not a massive spike, but it's definitely lower than a lot of the candles around it. And again, volume spike on VWAP. So that is how you can use VWAP. Again, just as a quick breakdown summary, this is the average price. It is fair value on the day. That is fair value. Again, buying below is normally what you want to do. That is going to be cheap. And again, you want to be selling above because that tends to be expensive. So that is a very simple version and a breakdown of how you would use the VWAP.